Hello, and welcome to the September 2023 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. August saw modest market pullbacks across the board as investors got nervous about risk. The U.S. indices were down slightly in the low single digits, with the Nasdaq doing the worst. International markets also pulled back, with developed markets down slightly more than the U.S. and with emerging markets doing worst of all. Even fixed income was down as higher interest rates drove the U.S. aggregate bond index down slightly. Financial markets spent the month in a risk-off mode, hurting riskier investments like tech stocks and emerging markets at the expense of more boring ones. The market performance reflected the underlying economy. While the second quarter's economic growth came in stronger than expected, the data showed that growth was likely to slow going forward. Business and consumer confidence both pulled back, and inflation showed signs of ticking up again, even as job growth continued to slow. Not all the news was bad, as income and spending growth beat expectations, but the data was overall weak enough to increase investor concerns. Despite those concerns, though, and the weak market performance of the month as a whole, markets did rally a bit towards the end on hopes the Federal Reserve might be pausing its rate increases. Rates ran up prior to the central bank's Jackson Hole conference, especially Chair Powell's speech, but have since pulled back. While inflation is up slightly, deeper analysis of the data shows the trend should still be down. And while growth has slowed, the economy is still growing, and that slower growth should also be good for inflation. While progress may be slowing, we are still moving forward. So on the whole, while weaker in some respects, last month's news was still good. The economy continued to grow as more people got jobs and worked and spent. While inflation is still too high, it's moving in the right direction. And while the Fed's alert for more inflation, they're very likely nearing the end of the rate increases. The outlook is still positive going forward. But even though the outlook is still positive, there are, of course, still risks. The biggest domestic one is that inflation spikes again, which could drive interest rates higher and force the Fed to keep hiking. Beyond the U.S., of course, we still have a war in Europe, as well as the China wildcard. That's not even considering the risks we don't see yet. Nothing is guaranteed. But despite those risks, as we look ahead, the fundamentals are still healthy. The economy may be slowing, but it is still growing. The biggest problem out there, inflation, continues to trend down. And that's a good place to be as we head back to work. That's it for this update. Thanks for watching. Join me in October for the next one, but until then, be sure to check my blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. And I hope you had a terrific summer.